Okay, so I was asked to do another video in reference to, let's say, sniper entries, or let's say more accurate entries. A lot of people think sniper entries refer to like type of wicks, which they do, but they can also be sniper entries can also be very accurate entries based off of price action. So I use something I call it the twins. I have some cousins. Like I use family names in reference to how I'm looking for some entries. So right now we're looking at a chart. We're looking at GBP AUD on the 1 hour time frame. There's absolutely nothing here on my chart. No support and resistance, no supply and demand zones, no trend lines, no Fibonacci, no nothing. This is a naked chart. And so let's just start from over here. Just pick a random area. So we see, let's say price has come up. We're looking, we've done some work on analysis, and we're looking in this particular area um, where price should fall. Let's say it falls at a Fibonacci 618 or something like that, or 786 in this area. And so what happens is, let me see if I just make this a little bit bigger. So making reference to twins, the twins are wicks that are about the same size. It's nothing to do with the candle size. Of course, a bearish engulfing or a bullish engulfing candle will be much more of a stronger indication and a reversal sign. But right now, we're only talking about wick sizes. And there are key levels of support and resistance. At this particular level here, we know that it's a level of resistance because we're looking at three different candle wicks in this area here. So you have like the first time it has come up, so it has created the first level of resistance. Then we have a second candle which has created a second level and it has respected this level of resistance. And then we have this third candle here that has also created looks like really a head and shoulders within the wicks itself. Um, long as the wicks usually have to be or close as possible to the same size. That's why I call them the twins. But give or take, the market doesn't always work that way. It doesn't always work 100%. So in this particular situation, just looking at what we're looking at right now, this would be considered, I would call this triplets, really, not even twins. I would call it triplets. And you can see that it's a head and shoulders. The third one made a lower high, and it's a bearish engulfing candle. So this would be great for entry, but of course you're not going to get that many pips because you see what happened and started to pull back again. So what I do is I'll take my zone and then I'll just actually spread it out. So now we have created a zone. Market has come back up. As we can see, we have a couple more triplets here. But we see here, we see these twins. They're really in the same length. These wicks, and then we have another bearish engulfing. But this would have been a losing trade if, for instance, you had your stop loss right above, and maybe you wouldn't have been a losing trade because if you place your stop loss right above here, you see it's come back and touched. You may have actually been able to make this run down here. But usually what we do anyway, we put our stop loss above the previous high. That is textbook as far as where stop loss should be placed. But let's say you did just put it a few pips above this entry here, you would have actually benefited and it made quite a number of pips. So we just had to wait a couple of hours for that to happen. And usually when I'm looking at this, as I come down, I come back up and I see another bearish engulfing and it doesn't drop again. It's usually coming back up for a liquidity grab because the market makers, the institutions, so forth, they haven't received enough of their contracts. So they go back up one more time to grab some liquidity and then it drops the market. So what you want to look at is looking at key areas of support and resistance. Price most likely is going to come back up into this area, I'm thinking, before it makes a significant drop. If it continues in its bullish momentum, it would have to close above this area right here. So let's look at another area. Let's say I think we did this one earlier. We're going to do it again. So now we've come down. Let's just take this area down. We've come down and now we're going to a bullish situation. We have a lot of wicks. We see that in this particular area, it is creating a level of support. We have wicks. We have one wick here. I want to draw a nice demand zone, I can do that right here. And we'll see that the price has come down. And in this demand zone, there's a lot of rejection here. Um, this candle here is a bullish candle. Nice thick long wick. The second candle is a bullish candle as well. We actually see a little bit of like an inverted head and shoulders, but then price comes back down. We don't see any twins here, but we see some other family members. I call them cousins. When you have multiple thick wicks or just even two in between some candles, this would be a sign for an entry for me. In this zone, we have a nice little, okay, like doji, um, nice little hammer here. These are all bullish indications that the bulls are about to take over. You could enter here for an aggressive move, or you can wait for this nice bullish momentum and take the buy here. Again, at another level of support, you can see if you look left over here, you have resistance, now turn support. Here's some twins, two wicks, and this is a bullish engulfing candle. You could have taken this at the close of this. It would have came back up, would have came back down if you've had your stop loss a little bit lower, um, below your entry of these two twins here. You wouldn't have been a big deal. It would have been 1, 2, 3, maybe 4 hours, and you would have shut up for some nice momentum. Get back into this area again. Now we know we're looking into an area of resistance. At one time it was support. What are we looking at here? We see bullish, we see a wick, we see the next candle. And it's not the same size. It's probably about half the size. I would like for it to be a little bit longer. But I think this is what they call, I forgot the chart pattern, which this is called a reversal pattern. So you can actually take it here from a Fibonacci standpoint. This is probably a 78.6, I believe. That's what it looks like. A 78.6. So you could have taken this, taken it down. Prices come back down into this level of support. We have some twins here. And then we have some twins in this area. So basically, your entries, people are looking and wondering, what are the perfect entries? How do I know? These type of patterns are giving you indication that the market is going to move. Not necessarily only the bullish engulfing candle, which is more of a higher probability, but when you see bullish engulfing candles with these type of reversals, that's going to be a strong move upwards or downwards. We see right here we have a nice level of support. We have some twins here, and then price shoots up. For those who like to scalp, to grab 20, 30 pips, and let's say even 40 pips. Let's see how many pips this would have been right here. This is probably, look at that, it's almost 40 pips, like 37 pips. This is a great way of entering the market, grabbing your pips and getting out. Again, a nice level of, this was resistance, now support. You got some twins, price goes up. You missed this one right here. We look over here, we have some twins over here, and even a cousin stepped in. You missed this move right here. Here's some twins right here. So whenever price breaks market structure, comes down to retest, there's always some type of indication that the move has finished, the retracement has finished, and it's about to move up. And usually it does that in the form of some wicks. That's what we call rejection. So we come up here, now we're about to create a lower high. And what do we see? We see some more, family members coming up. We see these twins, two wicks, almost the same height. To me, it's the same thing, and it's a bearish engulfing candle coming all the way down back to the level of support. We have a whole bunch of wicks here showing that this level of support is definitely something that is strong and is to be respected. What do we have here? Pay attention to the wicks. We have one wick here. We have one with a little bit longer. This next wick here is higher than the previous one. You could take it here. Here goes the family members. I would call these twins as well. The length of this particular wick here, it's relatively not as short, and I would consider this a twin. Here we go here as well. This one looks similar to this one down here. Another level of support here. You have some twins. Come up here, we have some twins. So what are you doing? You want to make sure you're looking at key levels, and at those key levels of support and resistance, you're looking for not so much just the chart pattern, the bearish engulfing, the double top. And if you do see these, that's great. Look for those reversal signals, but also look in the wick areas and see what it's trying to tell you about what's going on. Let's take it back and see from this standpoint here. Okay, so right here, we're not going to count out reversal patterns, because reversal patterns is also key as well. It's very strong indication. So you're looking for wicks, you're looking for the twins, you're looking for the cousins. Sometimes you won't see that. Sometimes you'll see a market pattern, and this is what we're looking at right here. We're looking at a morning star right here, and it's at a level of support, a significant level of support. Same thing right here. You have a morning star in this area here, and then we have this nice move down. If you're using RSI, and you see that it's definitely oversold, it's hitting the 25, I believe, and we have a wick creating support. Next one, respected support. It's basically more than half the size of the wick that I like to see to call it a twin or tweezer, whatever you want to call it. I call it twins. But you can take the trade. I wouldn't go hard just to make sure, but price did not come back down. As you see, it came back, created a lower high, made a reversal signal, and then went up. And of course, as you can see here, there is some more twins. Once price action broke this level of resistance, it came up, it retested. Here's some more twins. So you see how it comes down, pull back, twins, comes up, pull back. Now here's no twin here, so if you're ordinary trading, you're riding it out, you ride it out, or you can get out, or you see this is a reversal pattern in itself. So you can take this trade up, come back down, reversal pattern, come up, come back down, bullish engulfing, come back down to retest. And you see the twins right here. Come back up, come back down, retest. I see some twins right here. Now, you get in, you're going to get some drawdown from this perspective. And the reason why I say that is because it's not really a significant pullback. You only have like 2 candles. You want to see like 2, 3. You want to see like 3 or 4 or more candles for a significant pullback. And so if you took this trade, you would have had some drawdown. Or if you had waited to come back here, you could have gotten in around this area. You see these twins here? You could have gotten right here. Once the market closed, you would have had a little bit of drawdown and it would have shot up. So again, you want to make sure that you have key levels of support and resistance on your charts. Let's say like right here. Let's see how the market respected this area. This is a nice little tip. I don't know if people know this. That when you draw a zone out, instead of trying to go all the way across and make sure it's right, you go to the coordinates. You change that number to like 1,000. And what it does, it takes it all the way across, so far across. And so now you have your level of support and resistance. Well, this actually is resistance right now, turned support zone, drawn out. And you see that price respects it, you see it, and you're able to, once you get into that area, look for the entries that you want to get. You want that sniper entry, and that's how you get that sniper entry. Okay, so let's say right here, I think we spoke about that area already. Let's go back over here. Let's look at this here. This whole situation right here. Now, when you look to the left, you see this huge wick, so we know it's a nice zone, and the zone is playing it off right here. So it's a nice level of resistance, resistance, resistance. You see a lot of wicks. Prices come up, broken it, but then you have all these wicks here. There we have a trifecta. Look at the wicks. The wicks can form a chart pattern as well, a wick pattern, I call it. Like this is nothing but a head and shoulders. You have the shoulder, the head, and you have the right shoulder, which is lower, and it comes down. You have this bearish engulfing candle, which could be considered twins right here as well, and take the trade. So what you're doing is you're looking at points of where key levels are, all these wicks, and you're looking for entries. All the candles and the wicks giving you indication that it's about to reverse, that it's okay to get into the market, whether it's a buy or a sell. Right here, it doesn't have to be necessarily right next to the candle, but the wicks, you see the wick has come back up to try to retest, or to try to break, and it was still rejected at that same level. Take the trade, take the sell once the candle's closed. This one here could be a little bit iffy. I would go ahead and take the trade. I wouldn't go in hard as far as my lot size is concerned. Maybe I would. It depends. I use a lot of different methods. You can use a Fibonacci to find out where we are. We are the key level of resistance. From a Fibonacci standpoint, I can tell you that we are. Take the trade. So this is pretty much, you can do this. They're on any time frame. They're on all time frames. So it doesn't make a difference. But this is how you look at the market as far as the entries are concerned. And there's nothing on my chart right now. I have this one zone up on this area. But you come into the chart, you find your areas of support and resistance, supply and demand, if you want to use in zones, of course. You can use the quarters theory, however you plot that out. And then really, once you get good, you don't have to have anything on your chart. You'll be able to see as it's happening. Okay, take the trade. Okay, take the trade. I believe I'm in this trade anyway over the weekend. I got in right up in here because of I saw the twins. I saw the twins here as well. So that's how we get these sniper entries. You can get this on any pair. Find a nice pair that moves smoothly and that shows you what it's going to do. And then that's it. That's all you have to do. I hope this helps everyone out. I didn't do a whole big markup because this is really about just entering the market, how you're going to enter the market. Again, key levels. When you see a lot of wicks, you add a key level of support or resistance. It's telling you that. And now what you're looking for is a reason to get into the market. The wicks are going to tell you that as well. The candles are going to tell you that as well. Market patterns, reversal patterns, all those things, you put those things together, you're going to enter the market exactly where you should. You're going to get those sniper entries, and it's just going to be a golden opportunity. So I hope this video helped you out. Until then, until next time, ciao bella.